Hello everyone. Now let's see a notification number 2/2019 central tax rate. Now this notification is of partial exemption and this is given in our book after composition levy. So you will find this notification in the chapter of composition levy. So please take it out. And when we were studying composition levy, I told you that we'll study this notification later on, right? So let's take it out. Okay, so here it says the central government, on the recommendation of the council and on being satisfied that it is necessary in the public interest so to do, whenever they issue an exemption notification, they'll always mention public interest. Hereby notifies that the central tax, this is the central tax, that is the CGST, on the intrastate supply, obviously intrastate supply of goods or services or both, the notification is for both, as specified in column 1 of the table below, shall be levied at the rate specified in the corresponding entry in column 2, subject to conditions mentioned in column 3. So let's see what are the conditions and everything. So this is the table. It is basically a concessional rate notification for small dealers, and it says first supplies of goods or services or both. It is applicable to both goods or services or both, up to an aggregate turnover of 50 lakh rupees made on or after the 1st of April in any financial year. So this notification is applicable for any financial year. In the old service tax and excise laws, this was called as SSI notification, small service industry notification or small scale industry notification. So it is reborn. So slowly and steadily we are going back to the old days. All the old provisions and the old notifications are reborn in the GST regime, and slowly after 10 years the GST will become as complicated and as troublesome as the old laws. Okay, then we'll face a requirement of bringing another new law and the cycle goes on. Anyways, let's see. So up to turnover of 50 lakh made from 1st April of any financial year by a registered person, and the rate is given as 3%. 3% is the rate. So 3% is the CGST rate for intrastate, but in intrastate you know that SGST is also levied. So 3 plus 3% of SGST will also be levied. So total will become 6%. Okay. So you can remove your goods or services at the rate of 6%. Totality. CGST plus SGST. So it's a good thing. Now what are the conditions attached? Let's see. Conditions are: supplies are made by registered person whose aggregate turnover in the preceding financial year was also 50 lakh rupees or below. Means who will get this benefit of this notification? Any person, any registered person, whether he is supplying goods or he is supplying services, whose turnover in the preceding financial year was 50 lakhs or less, and in the current year also this 6% concessional rate is applicable, 3 plus 3, only up to the first 50 lakhs. Okay, not beyond that. So similar to composition scheme. Good. Then who is not eligible to pay tax under subsection 1 of section 10? Means if you are eligible under section 10, that is composition scheme, then you go there. Then you cannot come under this notification. So this concessional rate notification is available only to those people who are not entitled to take, means to avail, composition levy. Okay, not eligible. Then who is not engaged in making any supply which is not leviable to tax under the said act. Write down daru, that is liquor, etc. So there are certain goods and services which are not liable to tax, that is on which GST is not imposable, there is no levy. So if you supply any of those things, then you cannot take the benefit of this notification. Then who is not engaged in making any interstate outward supply. This is similar to composition. You cannot make interstate supply. If you are making interstate supplies, you cannot take the benefit of this notification because you will be liable to pay IGST in that case. And this notification is for CGST, not for IGST. So you should not be engaged in interstate supply. Then who is neither a casual taxable person nor a non-resident taxable person. You should not be CTP or an RTP. This is also similar to composition levy. Then who is not engaged in making any supply through any electronic commerce operator who is required to collect tax under section 52. So you should sell on your own and not through an eco who will be required to collect tax from you. Then who is not engaged in making supplies of goods, the description of which is specified in column 3 of the annexure below. This is the same, the ice cream and cigarettes, tobacco products, pan masala. Those are excluded products. You are not entitled. So all these are different conditions and basically you have to read it 3-4 times. Okay. Then where more than one registered person are having the same PAN. Now these conditions are almost similar to composition scheme. That if you have more than one registration with the same PAN means, as I told you, you have different state registrations with the same PAN, like Farooq Haque classes Delhi, Farooq Haque classes Nagpur, Farooq Haque classes Kolkata, Farooq Haque classes so on and so forth. I've got many registrations in different states in example. Then central tax on supplies by all such registered persons is paid at the rate specified under this notification. Means you have to take the option of this notification. This notification is also optional like composition scheme. So if you opt in this concessional rate notification, then you have to opt for all your registered premises. Okay, not some, it has to be all. Then the registered person shall not collect tax from the recipient on supplies made by him, nor shall he be entitled to take input tax credit. So this is also similar in composition, as I told you, that you don't have to mention the amount of tax in the invoice separately. So in this case also you will not mention the tax separately and you will not collect it from the buyer, and the buyer cannot take, means the recipient cannot take the credit. Then the registered person shall issue, instead of a tax invoice, a bill of supply. See, this is the reason, because in tax invoice you have to show the amount of tax separately, but in this case you cannot show it separately. Therefore you cannot issue tax invoice. Instead you will have to issue a bill of supply as referred to in section 31. We will see this later on. And particulars as prescribed in rule 49. This also we will see in the chapter of invoice. Okay. Then the registered person shall mention the following words at the top of the bill. Taxable person paying tax in terms of notification 2/19. Not eligible to collect tax on supplies. So these words have to be inscribed on the bill itself, on the bill of supply that you are issuing. And the registered person opting to pay tax at the rate of 3% under this notification shall be liable to pay central tax at the rate of 3% on all outward supplies, notwithstanding any other notification issued under section 9 or 11. Now this is an interesting point. This is a very interesting point. What it says, that if you opt for paying this 3%, then you have to pay it on all your outward supplies, irrespective of the rate which is given in the 9.1. 9.1 is the main charging section, which says that the rate will be imposed as per the recommendation of the council. Government will specify the rates. So for example, you are supplying say 10 goods. different kinds of goods, and it may happen that some of the goods, the normal rate of tax on some of the goods is higher than 6% overall or 3% CGST, and on some of the goods it may be even less than 3%. Similarly, there can be exemption notifications under Section 11. Section 11 means exemption. It gives a power to the government to grant exemptions. So on some of the goods the tax may be exempted also. So then what will happen in such a case? Like I'll tell you with an example. Let's see. Suppose here is a person who makes separate supplies. Product A, which is chargeable at 2% CGST. Product B, which is chargeable at 8% CGST. Product C, chargeable at 9% CGST. Product D, which is chargeable at maybe 12% CGST, but is exempted under Section 11. Okay, it is exempted under Section 11, and so on and so forth. So you may be supplying different goods. Now, if you opt under this notification 2/19, you will pay tax on all these goods or services, as the case may be, on all at the rate of 3%. All such supplies, including the exempt supply, including the supply which was normally chargeable at a lesser rate. So if you won't opt for this notification number 2/19, then on A you would have paid tax at 2%. But if you are opting for this notification, you will have to pay 3% on A also, as well as B, as well as C, as well as D. D, which is exempt, but here you will have to pay 3% on exempt goods also. Understood? So this is an interesting point. Then coming back, the registered person opting to pay central tax at the rate of 3% under this notification shall be liable to pay central tax on inward supplies on which he is liable to pay tax under subsection 3, or as the case may be 4 of 9, at the applicable rates, similar to composition scheme. All these points are similar to composition scheme. So as I told you there in composition that here is the supplier. So on his outward supplies, he will pay 3% CGST, okay, under this notification, and 3% SGST, so total 6%, right? But suppose on his inward supplies, if he is liable to pay tax on reverse charge, if he is liable to pay tax on reverse charge, then what rate he will pay? 6% on the inward supplies also? No. Here he will pay tax at normal rates. Whatever normal rates are applicable on these goods or services, as the case may be, okay, and not at 6%. Then point number 8 says that where any registered person who has availed of input tax credit opts to pay tax under this notification, he shall pay an amount by way of debit to electronic credit ledger or electronic cash ledger. He has to pay an amount. What amount he has to pay? You will not understand anything right now under this point if you read it. So let's understand it. And this happens even for composition levy. Now we are going to study this thing in detail when we'll go in ITC chapter. Okay, so I'll explain this point again in detail in ITC chapter, but right now I'll give you a brief explanation and the logic of it, not the calculation part but the logic. What happens is that since these composition scheme and this notification, they are perpetual, means you can claim every year. Okay, so what happens is that if the last year and the current year, so last year if you were paying normal tax, normal rate of tax, then you would also have been claiming ITC. ITC claimed on inputs, input services and capital goods, right? This year you opt for notification 2/19 or maybe composition scheme. So this year you are opting for this notification. Last year you were paying normal tax. So when last year you were paying normal tax, you were claiming ITC also. So this day, 1st April, is called as the transition day. You transition from one method to another method. Transition. So on this day what will happen is that you would have got some stock of inputs. Okay, as such means inputs lying as such. Then in semi-finished goods as on 31st March, and in finished goods which are already produced but not sold, they are lying in stock on 31st March, right? So you must have got stock of inputs as such means raw material as raw material which are in semi-finished means WIP, work in progress as per costing language, which is there on 31st March, and the finished goods which has already been manufactured and it is also lying in stock with us. Okay, now the problem is that this stock of inputs might have been purchased somewhere here, that is in the last year, maybe in March, February, January, December. That is the time when we had purchased this stock. So when we had purchased that stock, we have taken credit, right? But now this is in stock, and this stock is going to be consumed tomorrow to manufacture new finished goods, or the WIP will convert into finished goods, or these finished goods which are lying in stock. When they are removed tomorrow, you would be paying concessional rate or the composition rate of tax, and the condition is that you will not receive any ITC. But this is the stock which you have on 31st March, and this stock will continue in April, but you have taken credit on that. That's not correct. So what you have to do is, once you calculate this stock, you will get the total stock of each raw material. Now calculate as per the number of raw materials that you have. So this is for total stock. Then see how much ITC was claimed on it. That you calculate how much ITC was claimed. That you will get as per the records. Now what you have to do is you have to pay this amount. Means basically you have to reverse the credit. So how do we reverse the credit? By debiting it to electronic credit ledger. If we have balance in credit ledger, that is the ITC balance, we'll debit it there. If no, then we'll have to debit it to cash ledger. Means we'll have to pay in cash. Okay, so you have to pay this amount, including on capital goods also. So this is regarding inputs. Then same thing you'll have to do for capital goods. Stock of capital goods. But in capital goods, what happens is, I'll tell you the logic part of it right now. That capital goods, the life of capital goods is quite long. So how much are we going to reverse? So it says that if you have bought some capital goods here and you have taken full credit, and now you are converting, you are going into this notification. So we'll see how much time has lapsed, and the total life is taken as 60 months. Total life of capital goods is estimated at 60 months in GST, and whatever time has gone here, say for example 12 months have gone and the balance period remains, 48 months remain. But we now assume that for these 48 months you are not going to take credit. So what we'll do is that out of full credit, we'll reduce the amount equal to 12 by 60 in the proportion. We'll reduce it, and whatever balance remains is the balance for 48 months. Means simple amortization. You amortize it over 60 months. 12 months is gone, 48 months remain, so you calculate the balance for 48 months, and this balance you have to pay. Means this amount you have to reverse. Okay, so this we have to do every time we opt for this notification. And earlier we were paying normal tax. And I'll also explain one more thing, that now you opt for this scheme. Now a day will come during this year when your turnover crosses the limit, exceeds the limit, that is in this case 50 lakhs. Okay, so when your turnover exceeds the limits, then you again start paying normal tax till the end of the year. So when you start paying normal rate of tax, you will also be entitled to take ITC. So now what you have to do is that when you cross this limit, you have to again calculate the stock. Now this stock is non-ITC stock. You haven't taken ITC because you might have bought this stock somewhere here when you were in the concessional rate notification. So you haven't taken ITC. So no problem. You calculate the stock, then you see how much GST was paid on it, and you can avail the credit, input tax credit. So this amount you will take as input tax credit on the day when you cross the limit of 50 lakhs and you start paying tax under normal scheme. So this claiming and reversal, this will continue. Every time you go into the notification, you will have to reverse the credit. You come out of the notification, you have to avail the credit on the stock. Similarly on capital goods also. So in capital goods, we'll see that how much time remains out of 60 months, how much is gone, how much remain. We'll divide the total credit in that proportion, and whatever remains will be allowed to you as credit. Okay, understood? So that is how the calculation is to be done, though we'll see this in detail later on in ITC chapter again. So that is given here in point number 8, that where any registered person who has availed of input tax credit, means in the past we were taking credit, opts to pay tax under this notification, he shall pay an amount equal to by debit to electronic credit ledger or cash ledger equivalent to the credit of input tax in respect of inputs held in stock and inputs contained in semi-finished or finished goods held in stock, and on capital goods, as if the supply made under this notification attracts the provisions of 18(4). So the calculation that I told you, 60 months and then division, that is as per 18(4), and the rules made thereunder. And after payment of such amount, the balance of input tax credit, suppose if the balance remains in electronic credit ledger, it will lapse. If balance remains, it will lapse. Normally it will not remain, but even if it remains, it will lapse. And explanation says that first supplies means what we can say, shall for the purpose of determining eligibility of a person to pay tax under this notification include the supplies from the first day of April of the financial year. First supplies means starting from 1st of April. Simple. To the date from which he becomes liable to registration, under the Act, but for the purpose of determination of tax payable under this notification shall not include the supplies from 1st day of April to the date from where he becomes liable for registration under the Act. Nothing understood, right? It's simple, and it's a very interesting point. Let me tell you. What happens is that if this is your financial year, now if suppose your turnover is below the registration threshold limit, what we also call as the exempt people, very small scale people are exempt from GST altogether. That threshold limit depends upon the state to state, and in some states, backward states, it is 10 lakhs, somewhere it is 20 lakhs. Nowadays it is also increased to 40 lakhs in some states. Okay, so whatever is that threshold limit, the basic threshold limit, below which you are not required to register yourself. Now, for example, if it is 20 lakhs, okay, and as we know that the turnover under this section is 50 lakhs, okay, so what it means? It means that when you calculate the criteria of 50 lakhs, means what is the ultimate that exemption you will get, you will include this turnover also when actually you were paying no tax. During this time we were paying no tax, then we'll pay 3% tax. But when your turnover exceeds 20 lakh and you become liable to pay tax, and then you opt for this notification, will you get another 50 lakhs under this notification? No. You will get only, if this 20 lakh turnover is already gone, then you will get the turnover of only 30 lakhs. That is up to 50 lakhs. So for calculating that total turnover of 50 lakh for eligibility, this turnover when you were below the basic threshold limit is to be added. So for eligibility it is to be added, but not for payment of tax. So if I say okay, 20 lakh is added, does that mean that you have to pay tax on that 20 lakh also at the rate of 3%? Answer is no. So you are not required to pay tax on that 20 lakh, but yes, for eligibility that 20 lakh is to be added. Okay, so that is given there. Read it again. First supplies shall start from 1st of April. Till here there is no problem. And includes, now this is important, includes the supplies from 1st April to the day when he becomes liable for registration. Okay, that is when he crosses the threshold limit under the said act. Okay, for determining eligibility of a person, for determining eligibility, that 20 lakh, first 20 lakh will be added. But for the purpose of determining tax payable under this notification shall not include that 20 lakh. So tax payable will not be calculated on that 20 lakh, but for eligibility, that is total eligibility of 50 lakh, that 20 lakh is to be included. Means government will give us that concessional rate only on difference of 30 lakhs. That is simple. And then the next year, the non-eligible goods, ice cream, pan masala, and tobacco substitutes. These are not entitled for this notification. Understood? And then a few more points are given, that in computing the aggregate turnover in order to determine eligibility of a registered person to pay central tax at 3%, value of supply of exempt services by way of extending deposits, loans and advances insofar as the consideration is by way of interest or discount shall not be taken into account. So if you are also like Farooq Haque classes is having a turnover by selling DVDs and pen drives, but I have also given some advances to people, some loans where the consideration is in the form of interest, and as you know, which is exempt. Consideration in the form of interest is exempt from GST. Okay, so will this turnover be also included in my hands for that 50 lakhs? The answer is no. This is not to be included. So this is the only exception. Otherwise, we have seen earlier in the discussion that exempt turnover is also chargeable at 3%, right? But not this one, extending deposits and loans. So extending deposits and loans, which is exempt, is not chargeable at 3%. Good. And explanation is of no use. A notification shall come into force on 1st day of April 2019. So this is applicable from financial year 1920, and it will continue in future. So that was a simple notification 2/19, and then a few clarifications are given. These are circulars issued by the department. This you have to go through once if you want to. Just read them once. These are for general knowledge sake. Okay, good.